The business plans, I put up part of it in the classroom last week, and this is the rest of it. When we talk about plans, we're talking about the future, right? Plans are not for the past, okay? So forward planning is an important part of managing a business because it helps ensure that the business goals can be achieved, right? We have three reasons there really why, and this is the nature of business plans. It's mostly reading things and writing things. Okay, so we prepared for a lot of reading this class. So the business goals can be achieved, the right resources are available at the right time, and resources are used efficiently. So those are three reasons for why you have business plans. With plans in place, it is possible to compare actual events with what was planned or expected. This will enable owners and managers to investigate any unfavorable outcomes, leading to plans to overcome any negative results. Okay, so basically this last sentence there is what you call management by exception. I don't know if you came across it in POB, okay, where you investigate unfavorable outcomes and negative results only. Things that went according to plan, then you would not investigate that. So it's called management by exception. Okay. Preparing a simple business plan. We'll go through the process first and then we will look at a work example. A business plan is a document that sets out the key ideas behind a proposed new business venture. It is an important document because it should ensure three things. Everyone involved is clear about the main objectives of the new business and so is focused on achieving those objectives. Okay, so everyone involved, down to the janitor, should be clear on what the objectives of the business is. And then next, everyone has thought through the feasibility of the business by considering any problems that are likely to arise and how they might be overcome. It attracts potential investors in the business, right? When people see you have plans, they know you are looking to go places. If you have no plan, you will just be like the proverbial horseman. You jump on your horse and you're trying to ride off in all different directions, and you can't really do that. You could only go in one direction at a time. Okay, a good plan makes it absolutely clear what the business will do and how it will be successful. That is, make a profit if that is the aim of your business. The main sections of a business plan, and these are the parts that you should memorize the headings for. And after you do that, it's easy to fill out the details and making up a business plan. The executive summary. It is a statement about what the business will do, the products or services which will be offered, how it will make money, how it will attract customers, and the amount of finance needed. Okay, and that is made by the executive or the people who are going to run the business, not necessarily the owners. Okay, the owners can hire a professional manager to, he will be the executive, they call him the CEO. The company background, this is include a description of the skills, experience, and qualification of the key personnel. right? Notice the key personnel is who makes up the company, and not the buildings and the assets and so on, right? It's the personnel, and what you'll give here is a description of the skills, experience, and qualifications of the people who are going to run the business, who are going to carry out the business plan. Next, you need a marketing plan. The marketing plan sets out answers to the following questions. Who are the potential customers? And is the market likely to grow and how quickly? Right? And in order to do the marketing plan, you have to do some research into the product and the services that you are going to be marketing, and you're going to have to do it in the area that you're targeting. When I say the area, the region that you're targeting, your potential customers. You have to do your market surveys and your advertising and what have you. Marketing analysis. Here we're going to have a statement about competitors, their market shares, and the plans to ensure customers will be attracted away from the competition to the new business. Okay, so I'm just getting some disturbance on the background. I hope it's not coming over too loud on your area. My area is a busy area. Right, so going to look at your competitors, their market shares, and the plans you have to attract your own customers and some of your competitors' customers as well for your new business. Then you have to have a financial plan. A financial plan will include, we know the financial statements, the revenue and costs, that is your income statement, and its main suppliers, where you're going to get the rent and the utilities and what have you. Then your capital requirements, where you're going to get the capital from, and a detailed 3-year forecast of profits, cash flows, and things like that. Right, we want to look at a simple business plan, an actual work example. We have Carl and Sabina have decided to go into business selling local produce at a busy crossroad located near the town of Palm Haven. They need to present a business plan to a local bank to support an application for a loan. They have drafted the following simple business plan. And you will notice we would follow the same headings that we just looked at. All right, this is how they would write it out, something like this. If you get it in an exam, you would be expected to write out something like this in a type of paragraph form. And prose, we are Carl and Sabina, and we plan to open a road stall selling fresh local produce. Our business will be called A1 Supplies. We will operate as a partnership. Our business will obtain fresh supplies early each day from local producers, which we will sell at the roadside at a busy crossroads just outside Palm Haven. The stall will be open for 7 hours each day, Monday to Saturday. All trading is planned to be on a cash basis. We will require a capital investment of 20,000 to cover the purchase of a vehicle for carrying supply. We plan to advertise our business at the roadside, but also by advertising more widely in local community centers. Okay, so this is what the executives have to say about their business. This is what they plan. Right, the company background. We have both worked in retailing for a number of years and have developed good skills in customer relations. Sabina also has some qualifications in finance and will be able to keep detailed accounting records, though we will need to employ an accountant in due course to make tax assessments. Carl also has some experience in agriculture, having worked with several local suppliers over recent years. So notice what they give as the company background. The personnel who will be working the business, managing the business, and what the qualifications are, what the experience are. Okay? Later on, they're going to need an accountant, but right now they don't need an accountant. Okay? Most small businesses do that. They do the bookkeeping themselves in any way they can. At the end of the year, they carry it to accountant to prepare the financial statement and make the tax assessment because they can't afford to employ an accountant throughout the year. The marketing plan and analysis. Most of our customers will be passing motorists, but we will also be accessible to local residents who can access our location on foot. The crossroad is busy throughout the day with tourists, but also local residents traveling to and from work. There is a large area available for motorists to park safely and conveniently. A survey we conducted among local residents confirmed the need for a supplier of local produce in the area, as the nearest retailer is some 3 miles away. There are similar businesses which are very successful located on our island. However, our nearest competitor will be 7 miles away. We are aware that there are plans to develop the tourist industry very near to our location, and there are also plans to build more homes locally. We are confident, therefore, that our potential market will grow in the future. Our suppliers are offering favorable prices because we will collect all the produce and will also pay cash. Okay, so there you have what your marketing plans, who your customer is going to be, what area you cover, who your nearest competitor is going to be, and what you foresee happening in the future as far as marketing your produce concerned. How you're going to be paid. The financial plan, our initial capital requirements are 25,000. This will be sufficient for us to purchase a delivery vehicle, store, opening inventory, and cash float. We plan to contribute 10,000 each from personal savings and will apply for a bank loan of 5,000. The partnership agreement will be to share profits and losses equally. Okay, so that's the financial plan, and this will be supported by financial statements, budgeted figures, and forecasts. Okay, the 3-year financial forecast as follows: year 1, year 2, year 3, and it's in the form of abbreviated income statement. Right, how much you expect to make in revenue each year, and you notice it's showing growth, right? Revenue is your sales. Okay, and this sales here is based on a markup of the cost of buying here. Okay, so you notice they are marking up the goods by about 300%, right? 40 by 3 give you 120, 48 by 3, 144, 56 by 3, 168. Okay, so you study this and you see how they're doing it. All right, operating expenses. Now, the reason they don't have the depreciation in the operating expenses is because depreciation, you don't have to pay for it. You just calculate the depreciation on the assets and you include it there. Okay, so you remember that. You have net profit, there's how much profit they expect to make each year. Some business plans, and I would advise you to include it to include the taxes. You treat it as a normal business expense. So after the net profit, you can minus 25% tax or whatever from your net profit to get the actual profit that you're going to share among the partners or distribute if it's a company. Right, your cash flow forecast, we could remember this from our last lesson, right? The year one, you introduce the capital and then have the bank loan. And we have the sales, total receipts, and then we have the payments and the usual things underneath. The opening balance, net outflow, closing balance. Just how we had it in the last thing, and it goes up and down here. Okay. So a cash forecast for 3 years. Right, so that would bring us to the end of the end for now. You have now covered everything on your syllabus.